Hey YouTube, what's going on? Chris here. I wanted to bring you guys another tutorial. Today we're going to be going over the bullish mat hold, a bullish continuation pattern. And what I'm going to be doing, I'm going to be reading out of my book, Candlestick Charting Explained by Gregory L. Morris. And we're going to go through the commentary on the mat hold line. We're going to go through the scenarios and psychology behind it and the rules of recognition. So for all the people who are really watching and getting something out of these videos, that's what I'm here for. I really want people to learn trading. It's my journey in trading. I've done this for about a year now, a couple months, and I just want to continue to get better. And I'm in love with Japanese candlestick charting. I love learning about the patterns. And you guys who are here, just striving for more information, I'm thrilled to have you with me. I enjoy doing these videos more than I do talking about, like going over Litecoin or Bitcoin or any of that. I really like going back and studying all the fundamentals and the things that we need to learn to be good at trading, in this market. So to be successful for the long term. So I'm about studying. I know if you're watching this video, you're about it. So if you guys could like, subscribe, hit that notification bell. We're trying for 100 likes on this tutorial, and we can't do it without you. You guys are the channel, so I really appreciate it. So what my book says here is the mat hold. It is a bullish continuation pattern. No confirmation is required. So what you're going to do, you're going to see this in an uptrend. See, guys, how this white candle here, you're in an uptrend. Then what you're going to see 3 days where you're having a relief or a pullback, and then you're going to shoot back up to the upside again. Now, it's more complicated than that, and that's what we're going to get into here. So it says the mat hold pattern is a modified version of the rising three methods. The first 3 days start out like the upside gap two crows. So an upside gap two crows, which I'll do a video on that, would be this white candle, and then you'd have these two candles, and most likely you'd get pushed to the downside from there. It's a bearish pattern. All right, so that's the upside gap two crows, with exception that the second black body, third day, dips into the body of the first long white day. So do you see how this body on the third candle right here, this closed, so this would be the close at the bottom into this candle. Do you see into the body, how it's about halfway into that? That's how you would know that you're having this bullish mat hold. So you would have this white candle, you'd gap up, you would see basically those two crows, then it'd be followed with this third day that closes down inside this white body. All right, and what it goes on to say here, then this is followed by another small black body that closes even lower, but still within the range of the first white body. The fifth day sees a large gap opening with a strong rise to a close above the high of the highest of the 3 black days. So that's this one here, right here. Here's your close higher than these 3 black days, even though that had that gap up. This suggests that the trend will continue upward and that new positions can be taken here. The mat hold pattern shows greater strength as a continuation signal than the rising three methods. And I'll do a video on the rising three methods as well. The reaction days are basically higher than the ones in the rising three methods. In other words, the mat hold does not quite take the rest or break from trend that the rising three methods does. So this is pretty quick here, guys. This little pullback or this relief that you're going to have to cool off the RSI, and then you're going to have that explosion back up. And now here's the rules. The 4 rules for this to be valid. Number 1, a long white day is formed in an uptrending market. So bingo, right there, 1 for 1. 2, a gap up with a lower close on the second day forms almost a star-like day, and that's that gap up, and you'll see this up in the sky here. Basically, when you have that gap and it's up here, that's what they're talking about in terms of a star. If you see that, then a lot of the times you would have bearish continuation if you had something like that. So that's 2 for 2. Number 3, the following 2 days are reaction days similar to the rising three method. So here's your reaction, your pullback. And then number 4, the 5th day is a white day with a new closing high, right? So 1, 2, 3, 4, that's your 5th candle. Look where it closed. Here's the close. Here was the open. Close up above. So that's 4 for 4. For your bullish mat hold line. And then what they're saying is once you see that close there, then you would take positions because you're going to be moving to the upside. Then it says scenarios and psychology behind this pattern. The market is continuing its rise with a long white day confirming the bullish action. The next day prices gap open and trade in a small range, only to close slightly lower. This lower close, lower than the open, is still a new closing high for the move. The bulls have only rested, even though the price action surely brings out the bears. The next couple of days cause some concern that the upward move may be in jeopardy. These days open about where the market closed on the previous day and then closed slightly lower. Even by the third such day, the market is still higher than the open of the first day, a long white day. An attitude that a reversal has failed develops and prices rise again to close at a new closing high. This fully supports the bull's case that this was just a pause in a strong upward trend. So, remember how we talked about nothing can go up in a straight line. It doesn't happen, or nothing drops in a straight line. You're always going to have these reactions. So this strong push up, here's your reaction, your cool off period before the next move up. So what I want you to do for some homework, guys, people who really want to study in this, go into Google, look up the bullish mat hold candlestick pattern, type that in, and start going through all the charts and try to find charts that have this pattern. And you'll see how successful it is. It's a very, very successful pattern. So keep this one on your radar. Let me know if you've ever used it before. But really pay attention that you have this strong white candle, you have the gap up, and then you have these three black candles here, and this last one closes inside this body of the first one, and then this fifth candle closes up above the top of this first one where you had that gap up. So guys, this is the bullish mat hold pattern. God bless each and every one of you.